Of course, there's a big debate about whether the super cycle is done or not, and there's divergent views. Where do you find yourself on this debate?
Karema, we think the super cycle has gone to sleep a bit. It's not done. The problem is we have had a very fast slowdown in the global economy this year, economic growth. We believe the growth is now hitting the bottom. But in this period, in this interim, especially the last 6 months, it's not only the platinum industry, the whole mining sector has been suffering from very sharply reducing margins, where some of these people, for a margin, an average margin of 25% seems to be a gross margin, seems to be a good margin for a miner to earn. Where some of these miners, even last year, they earned margins in excess of 50%, which was actually that's why these guys just kept on making and mining, and the dust was just going everywhere for the miners. But some sectors, especially everybody now, all the sectors are actually concerned. The margins are narrowing because the prices are falling. So commodity prices has been falling quite fast this year, generally, all commodity prices. And so the demand is not there. In the meanwhile, these companies, these massive companies, have got such incredible investment in mining capacity, and they are just still busy churning out those commodities. So let's make make hay while the sun shines. So the sun is sort of slowly getting a bit weaker with the margins tightening. But the good news is we've got different scenarios for the global economy. But
take us through those scenarios. Of course, I mean there is the kind of outlook that we're talking about in these various fields. Take us through kind of your high road scenarios, if you like.
Yeah. Okay. Well, first of all, our high road scenario, which is we only give it 10% probability. We didn't even discuss in our conference today. It's just we only see it really materializing in about 2 years' time. In our conference,
and what are the drivers of the high road scenario?
The very high road scenario is just everything works together, and everybody's talking together, especially in Europe. In Europe, we see business and labor and governments getting a pact. By the way, the high road for South African mining will be very much the same thing, which is we're very far off from.
In fact, our pact has come under considerable strain, if you've noticed the last couple of months, particularly in platinum.
That's so true. And not even just platinum. And it's people don't, the workers and even government doesn't understand the strains that the profitability strains that the platinum industry is onto. And the market is slowly but surely realizing that. And that's why it's the only commodity that's really showing a good sort of gold as well. Gold is, of course, it's a random walk. It's another story. But platinum is actually starting to pick up. The price is starting to pick up.
But Jacques, I wanted to ask you, I mean, we're sitting at top 80% of the world's platinum in the world. Why are we still takers?
Yeah, we've been talking. That is an interesting one. OPEC weren't takers. The reality is you can also, the market is actually now going to be the price makers, because what's happening, the reality is now setting in. The miners actually did their feasibilities on these projects way back with very relatively low labor costs. And that, of course, now the reality is there. Our labor prices are sort of becoming much more market related, very much market related. And the other problem is, especially our deep underground miners, the world has changed. They did not anticipate when they did those feasibilities these high electricity prices. Globally, they say we are not that bad, but we are on the top. We're already very expensive as far as electricity is concerned. Now, this next 5 years of 16% increase. We're not going to have, I think that's the end of underground mining in South Africa.
And if you look at the kind of low road scenarios, there is the belief that Europe's crisis is far more fundamental than is given credit to, that there's in fact a double dip recession, that we are going to be seeing a huge struggle for the continent to get out of, and growth in China is slowing, even though the middle class there is expanding constantly. Take us through what the drivers for that low road scenario.
So the low road scenario, so the high road is slowly positive, but it's actually what I discussed now. We've got a high road which is but we've got a middle road scenario which is...
Do the low road first, we'll come to the middle one.
Okay.
Yes.
The low road is that Europe actually, as you say, it's already in a double dip recession, gets in a really serious recession, and breaks up and it pulls down the whole world. That's really the worst scenario. But also there are signs. Does China have its own banking crisis? Does it have its own credit crunch? Nothing is there. It's so uncertain. What is happening in China, really? If we look at the demand and the buying of commodities, not everything gels here if you analyze what's going into China. There's also the risk, but we think there's the risk of America going into the fiscal cliff. So if any of those three happen, we can have a very much double dip. We'll have a global double dip recession. And then we see commodity prices all collapsing other than gold.
Take us through that middle road.
Now, the middle road, which we give a 70% probability to, sees we are actually now at the bottom. We see growth moving sideways, global growth moving sideways until the end of the year, and then slowly picking up over the next year and a half. That's as far as we've got a longer term scenario as well. But let's say, actually, the long term scenario, that scenario is actually, it's a very much a low growth, a very steady but slow growth. Not as bad as Japan. Japan had, as you know, very long recession. We see, and the hopes we have here is, number one, this incredible money sloshing around in the system with the printing of the monies of the central banks, all working in concert in the world. That's major, so that money's there. And we see the drive, but normally the recession is driven by government expenditure, Keynesian stimulus. This time we can't because the governments are so much in debt. So we see it from the consumer, they're sort of starting to spend. And then also, there's a lot of fear that the Tea Party and other like the Germans also pushed Europe, come on, you've got to now actually just be austere. And austerity is now proven in Europe, actually it just kills growth. And even next year we see growth still being negative in Europe.
But if we're saying that austerity is not the answer, and we're saying that too many governments are in too big debts, and that you can't just have reckless stimulus packages either, what are we talking about? Are we talking about a combination of measures, so to speak?
Yeah. The answer, even the Obama administration is now talking about a long plan. And some of the sort of more level-headed Republicans, because if there's a fiscal cliff in America, the big lobbyists, the arms companies, everybody will lose. So there's so much intellectual capital, money, thinking going into that now. And it seems the logical answer is a recognition they have a major debt problem, and let them pay it back over a year, over a period like 10 years. And we think something like that will happen. So it will be that will keep global growth, put a lid on global growth for a long period as they unwind this debt. But it won't necessarily be a recession.
And of course, for this middle road to succeed, Jacques, as a final point, what you do need is a social compact between all the major players in the economy.
This middle road could actually survive without that. Europe is going to, but Europe is really going to then be in trouble, and South Africa mining will be in trouble. That's another. But it seems the political system in America there's already a compact now with the parties. So and the Chinese is driven by their government, and we believe those two governments will allow this middle road to materialize. And in that middle road, there will be first consumer commodities like copper, aluminium, and then sort of in the next phase, as these, we don't see government projects, but then we see projects coming off the ground, PPP projects. At this stage, the banks are still very much not ready for it. They take a long time to get ready for things, as we've noticed. But we hope by next year there would be some funding from merchant bankers and bankers, and there's a lot of money. You know, and the interest rates are so low, long term. You can get
So there is, a lot of room for public-private partnerships.
Very much so. There's so much cheap money around in the system, and that's why that's also how we see this middle road scenario then growing further, and all of that is then good but slowly. So the super cycle will slowly but surely get in place again. Maybe after 5 years we can start calling it super again.